Three devastating waves of inflation occurred in the US in the 1970s. All three of these waves were absolutely catastrophic events for the US stock market that dropped in total by 70% on an inflation-adjusted basis over the course of 10 years. Fast forward to today, and we've just seen the largest wave in inflation since the 1970s that took the market down by 25% in 2022, with many economists arguing that this was just the first of many waves of inflation, with the consumer price index set to follow the same exact path as the 1970s. The former Treasury Secretary Larry Summers, for example, is repeatedly warning that people should be worried about a second wave of inflation, citing the high levels of government and deficit spending as a major driving factor behind it. We're going to look at whether we're actually seeing signs of a second wave of inflation starting and how this is going to impact the stock market. For Independence Day, we are doing a special 30% discount on our membership, something we rarely do. So if you've been thinking about trying our membership out, now's your time to do it. When we look at this indicator called supercore inflation, it was showing that the US was seeing a significant pickup in inflationary forces in 2024, starting to look like a second inflation wave, just like the US witnessed during the 1970s. In fact, this reading that you see here was from March 2024, and it showed a 5% increase in inflation over the course of just 3 months, which is very high compared to anything we've seen over the last decade. This is a measure of sticky inflation, so basically telling us that in March of 2024, inflation was very stubborn, but it has calmed down since. The April and May readings showed a significant cool down in this inflation metric. So for now, not really telling us that we're seeing a sustained second wave of inflation. But there are still risks that this changes in the next few months. It's not a given that inflation will calmly move back down to healthy levels. So are we seeing any signs that it's about to turn up again? To answer that, we can't just look at this supercore inflation metric. Supercore inflation actually excludes energy, food, and shelter inflation, which are, of course, huge driving factors behind inflation. If food and energy prices are rising, that directly impacts the cost of other things. All businesses need energy and food to function, so if these things rise in price, they directly get transferred to the cost of other items. This is what gasoline prices look like at US gas pumps. They have been on a steady decline since June of 2022, again, not really showing signs of a second inflation wave. Now, we have seen a little bit of a bump in gasoline prices since January of 2024, but when we look at the price of oil, which is ultimately what sets the price at gas pumps, we see that over the last 3 months, crude oil prices have come down, which could make gasoline prices follow. The same goes for food. Food inflation is currently sitting at 2%, which is a reasonable amount of inflation compared to the last 20 years. Keep in mind that inflation was at 11% just 2 short years ago. Right now, we're not seeing signs that food inflation is picking back up again. But what does this all mean for the stock market? Ultimately, stocks care about inflation because of the Federal Reserve. In early 2021, for example, inflation was already running hot, but the stock market continued to move higher until the end of the year. It's only when the Fed started to talk about rate hikes that the stock market actually dropped by 25%. And in June of 2022, inflation peaked, but the stock market continued to move down until October. It's only when the Federal Reserve was talking about pausing rate hikes that the stock market bottomed and finally began to move higher. So knowing that inflation is going to stabilize is one thing, but ultimately the real impact on the stock market is going to come from what the Federal Reserve decides. This is the Federal Reserve interest rate, and the central bank has kept interest rate just above 5% since August of 2023. Every time they've talked about cutting interest rates, it's propelled the stock market higher. This is why we think there's a risk that the stock market goes even higher from here. Let me explain. In the Federal Reserve's last meeting, they were more hawkish than expected. Jerome Powell explained that the Fed was not ready to cut interest rates yet because of stubborn inflation. When we look at the S&P 500's reaction to the meeting, which occurred right here, it was fantastic, with the market moving up aggressively following the meeting. So it looks like the market was happy about what the Fed said, but underneath the surface, the reality is quite different. This index right here is the RSP, and it's the equal-weighted version of the S&P 500 of the US stock market, which removes the outsized contributions from stocks like Nvidia, Microsoft, and Apple. And you can see this equal weighted index has actually been moving down over the last few weeks. Now, a lot of people believe this is bad news for the S&P 500 that's going to snap back down to reality. But we have a different perspective where the RSP could actually catch back up to the S&P 500 and lead the market up for another rally. When we look at core inflation in the United States, it's down to one of the lowest levels over the last 4 years, a lower level than June of 2023, which is the moment when the Fed decided to stop raising interest rates. So this could actually lead the Fed cut interest rates more aggressively than what investors are pricing right now. And however crazy it may sound, push the market higher for another final thrust up. We've managed to keep our members on the right side of the market throughout 2024, avoiding this correction in March, picking back up cheap stocks in April of 2024, riding up some fantastic trades over the last few months. If you want to have access to all of our trading decisions and all of the day-by-day guidance that we provide for both investors and traders, make sure to join our fantastic community at gameoftrades.net.